Sit down and listen carefully, because the end of the year is where careless traders get stripped clean and disciplined ones quietly walk away heavier. I've seen more fortunes bruised in December than in any panic month you care to name. Not because the market is cruel, but because traders forget that the market is run by people, and people behave strangely when a year is closing and books must be balanced. At the end of the year, the market stops being honest. It becomes theatrical. Money managers dress their statements. Big operators lock in profits. Weak hands pray. Strong hands distribute. And amateurs, always amateurs, confuse noise for opportunity. You must understand this before you place a single order. When the year is ending, prices do not move because of new information. They move because of accounting, psychology, and positioning. Profits are taken not because a trend is broken, but because someone needs to show cash. Losses are dumped not because hope is gone, but because tax law demands it. That alone should tell you that December is not a month to trade like the rest of the year. I learned long ago that the market has seasons, just like human behavior, and the end of the year is a season of deception. You'll see sudden drops that mean nothing, sharp rallies that go nowhere, stocks that should fall but refuse to, others that should rise but collapse under silent selling. If you don't know why this happens, you will invent reasons. And invented reasons are how traders go broke. Let me be blunt. If you trade December the same way you traded March, you deserve what you lose. At year-end, large players are not hunting new trends. They are protecting gains. That changes everything. When profits are taken, they are taken aggressively, without warning, and often without logic. The chart may look strong, the story may sound perfect, and the numbers may be clean, but the seller doesn't care. He already won. He's exiting. That is why you'll see abnormal behavior, sudden wicks, failed breakouts, stops hunted with surgical precision. The market is thinner, liquidity dries up, and thin markets exaggerate every mistake. This is where human psychology becomes your enemy. Most traders feel pressure in December. They want to finish the year strong. That desire alone is enough to ruin judgment. The market does not reward emotional deadlines. It punishes them. I made some of my worst decisions when I felt I had something to prove to time itself. The market does not care about your calendar, your rent, your holiday plans, or your resolutions. It only responds to supply, demand, and fear. At the end of the year, fear wears a different suit. It's not panic, it's anxiety. Quiet, controlled, institutional anxiety, and anxiety produces erratic price behavior. Here's the first rule you must obey. Reduce size. If you trade the same size in December that you traded in high liquidity months, you are reckless. Smaller position sizes are not cowardice, they are intelligence. Thin markets magnify risk. A normal pullback becomes a stop-out. A normal breakout becomes a trap. I survived long enough in this business to learn that survival itself is a skill, and December is a month for survival, not heroics. The second rule is patience, but not the lazy kind. I mean selective patience. You must trade less and think more. Most days at year-end offer nothing worth risking capital for. The market will tempt you with movement. Movement is not opportunity. I made my money by waiting. I lost it when I grew bored. At year-end, boredom is lethal. Now let me talk about profit-taking, because this is where most traders misunderstand what they are seeing. When investors take profits, they do not announce it. They distribute quietly into strength. They sell into good news. They sell into optimism. They sell when the chart looks best. That is why December tops often look beautiful before they fail. You must learn to read intent, not just patterns. A market that rises weakly on low volume while news is glowing is not strong. It is being sold into. A market that falls sharply without follow-through is not weak. It is being shaken. This is abnormal behavior only if you expect normal conditions. Stop expecting fairness. The market at year-end is a place where traps are laid for traders who believe every move must mean something. Sometimes a move means nothing more than a fund closing a position before the books close. Your job is not to predict these moves. Your job is to avoid being injured by them. That brings me to risk management, the only reason anyone survives long enough to learn anything. At year end, your stops must be wider or your trades shorter. There is no middle ground. Tight stops in thin markets are donations. Wide stops without reduced size are suicide. Risk must be calculated before the trade, not justified after it. I blew fortunes by thinking I was right instead of thinking about how much I could be wrong. December punished me brutally for that arrogance. If you feel the need to force trades because this is your last chance of the year, you are already defeated. The market smells desperation the way sharks smell blood. Here is a truth most traders hate. Sometimes the best trade at year end is no trade at all. You don't get paid for activity, you get paid for correctness. Let me talk about abnormal behavior in clearer terms. At year end, correlations break down. Sectors decouple. Indices move without participation. Stocks gap for no reason and retrace just as fast. Algorithms amplify illiquidity, and rumors carry more weight than data. This is not a playground for beginners or ego-driven veterans. The disciplined trader treats December like a minefield. He steps carefully, watches others lose limbs, and exits intact. One of my greatest mistakes was believing that experience made me immune to conditions. Experience only helps if it makes you humble. Otherwise, it accelerates your downfall. When you see sudden spikes against your position late in the year, don't argue with them. Ask who benefits. When you see markets refuse to break despite bad news, don't short out of frustration. Ask who is supporting price. Markets don't behave abnormally without a reason. The reason is just not visible to you. Another rule: do not hold hope trades into the year's close. Hope is not a strategy. Hope is a delay tactic used by losing traders to avoid admitting error. At year end, hope trades are liquidated mercilessly. Funds will not carry dead weight into a new year. Neither should you. If you are in a trade and the market is not paying you, get out, especially in December. Time decay is real, not just in options, but in attention, liquidity, and conviction. Now listen to this carefully, because it cost me dearly to learn it. End-of-year rallies and sell-offs are often retraced in January. That does not mean you should trade them blindly. It means you should respect their artificial nature. What is forced can be undone. Smart traders mark levels, not emotions. You don't chase December moves. You observe them. You let the market show its hand. Then, when the new year begins and liquidity returns, you act with clarity. If you must trade year-end, trade only the clearest setups. Trade with reduced size. Take profits quickly. Avoid overnight exposure unless you are being paid well for the risk. And above all, protect your capital. Capital is not just money. It is confidence, discipline, and the ability to continue. Lose those, and the market will finish you. I made fortunes by understanding human behavior. I lost fortunes by forgetting it. The market is a mirror. At year end, it reflects greed, fear, vanity, and relief all at once. If you feel emotional, step away. If you feel overconfident, step away. If you feel the urge to make something happen, step away. The market will be there in January. Your account might not be if you act foolishly now. This business rewards restraint more than brilliance, especially when the year is ending. Remember this: the goal is not to end the year with a dramatic win. The goal is to start the next year with intact capital and a clear mind. That alone puts you ahead of most. Trade like a professional. Think like a survivor. And never forget the market doesn't care how the year ends for you. It only cares how you behave when conditions change. That lesson, learned late, cost me everything once. Learn it now, and it may save you everything.